What's good, YouTube? Welcome back to my video. So today what I wanted to talk to you guys about is car lots. They had earnings today. So as you guys could tell, the stock went down after hours. It was down at one point about 6%. But essentially what I wanted to talk to you guys about was what happened in the earnings and the earnings call. So just a quick summary, they were forecasted to lose about 20 cents per share. They ended up only losing 6 cents per share, so they beat their earnings per share. And then for the forecast in terms of revenue, they were expected to make 44 million, or let's say 45 million, and they made 50.77 million. So they beat their numbers. However, you're gonna ask yourself, why has the stock gone down? And even at one point it was down well above 6%. So the reason for that being is because the company had withdrawn its previous provided 2021 outlook. So they essentially said that their 2021 outlook is out the window, and there are multiple reasons, and they have explained this in the earnings call as to why this has happened. So the first thing is they are having issues in terms of supply chain. So right now there is a shortage of chips, so the companies that are making brand new 2022 models are not making as much due to the shortage of chips, which means that there's less new cars available. So a lot of people are trying to buy new cars and they are very limited to the new cars that they're able to buy. So what do? Is they end up buying used cars. And now that there's a lot more used buyers than there is typically, it comes down to demand and supply, and obviously there's not enough supply and too much demand, so the prices of used cars are going up. And as I mentioned to you guys before in the first video that I made, prior to LOTZ merging, they don't make money based on how much dollars they're selling in terms of the car. They make it on a per unit basis. So it doesn't matter if a car is 50,000 or 10,000, they're still making the same X amount of dollars. So for them, pricing going up isn't really a good thing for cars. They'd rather keep the prices low because they could turn around more cars. And as I mentioned, more people are buying used cars, and what's happening is the people that are leasing cars and getting new cars every 2 years or every year, even every 3 years, these leases aren't being, once the car is done being leased, these cars are not coming to lots anymore, because the people that are normally leasing new cars, there isn't new cars available to lease, or there's very limited on what they could lease in their options and the price point as well. So they are choosing not to lease new cars, which means less inventory for them. So that's another downside for them. Also another thing in terms of inventory. Before, they were at 30% of inventories were cars of $15,000 and below. Anywhere between 10 to 12,000 was about 35% of their inventory. Right now, their inventory has dropped down to about 10% of it being under that 12 to 15K mark, because prices of used cars have gone up. So as prices of used cars has gone up, they are holding less cheap cars and less people are buying. Now, a big shift that they changed in their business model that they've mentioned was that originally they wanted to own 0 cars. They didn't want to own any of the cars. They wanted to sell cars for other people and make a profit off of, or charge a commission off of selling their car for them. However, due to the very, very low of inventory, as you could tell, the stock price has definitely taken a huge hit because of this inventory. They are now buying about 80% of the cars. They are buying them through auctions and other places. So they're actually owning the cars now and reselling them for a profit. Whereas before, that wasn't their business model and that wasn't their game plan that they wanted to do, because it requires more risk now that your capital is actually being tied up, where before they didn't have capital tied up because they're just selling someone else's car and charging them a flat fee. So this is another reason as to why the stock price has gone down over time, but they've mentioned that in the call. They also mentioned lower priced inventory usually turns around very, very quick. They're able to sell multiple units at a cheaper price, but because now prices have gone up, they can't sell as much and as quick. Now, what they went ahead and did is they mentioned in terms of inventory, they're finally starting to see some inventory slowly starting to pick up. So some of these companies are reaching out to them and saying, here's my inventory, start selling my cars. And their partners are contacting them. So they think that there's going to be a change in terms of the used car market, but they mentioned that there's no guarantees, anything could happen, etc. And another factor that we didn't mention is people are now working remote, or they're working 1 or 2 days in the office and the rest remote. So they're actually able to move out of the cities, and some people are now having to buy cars because they're moving out of the city. So when they want to go travel to work once or twice a week, they need a used car, and that's another factor that's driving the used car market. So what did they mention is that they think this is going to be changing shortly. They are going to be, they mentioned that they're not going to stop opening up new hubs. So what they're doing is they're looking to open up new hubs in every state. And they said that they don't plan on stopping that. So they're going to keep growing, keep opening new hubs, even though their inventory hasn't fully picked back up. And they said they're going to keep working on their partners. So once the inventory start picking back up, they're going to have multiple locations and they can sell at multiple places. So you could see a rapid growth in terms of the stock price once everything starts picking back up. They also mentioned that they're going to continue foot traffic in their locations. They started their first ever campaign. They launched their campaign, I believe they mentioned it was in Chicago. And they're also hired in-house to fix up their website infrastructure. And yeah, that's pretty much it in terms of the summary for the that's pretty much the summary. They mentioned that they were also getting about 100% quarter over quarter in terms of insurance revenue, and their cash was sitting about $260 million. So CarLotz, as you could tell, has a lot of issues, which the stock price obviously reflects. However, it could have some good upside once everything starts picking back up. I don't believe this is one of those stocks that you could, buy and sell quickly to make a whole lot of money. This may take some time. But in terms of the actual chart itself, pretty much I have this this purple rectangle drawn up. This is the areas where I'd want to buy. Anything below that 420 mark, and then anything below $4, I really won't like the stock anymore, because it could keep going down. But this is the area that I would like to buy, and I would hope that it holds above that $4 mark. But that's pretty much my thoughts on the earnings and the chart. Please like and subscribe. Peace.